Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 968th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Traders, hello again. 967 other installments, a lot like the video you're about to see. Traders, tonight there's a lot of stuff on my board. There's a lot we need to discuss. We need to look back a few weeks, and then we need to look forward for tomorrow. So we have a lot to discuss in this video. Please pay attention. Before I go forward, we know that futures trading is extremely risky and could cause you substantial financial loss. We know that futures trading is not suitable for all trading accounts, and we know that if you do not have risk capital to lose, you should not be in the futures game, and certainly a stop is your best friend. Always trade with stops. All right, traders, so where are we? For trading on January 15th, that would be Tuesday, 2013. This video we're filming it on Monday night for trading on Tuesday. Traders, a lot is on this board. First of all, a red omni. Hate those red omnis. Red omni means we expect the market to go lower on Jan 15th. However, we expect it to start off lower. Will it end up lower at the end of the day? That could be another story. We'll talk about that. But we are starting off by selling the rallies on Jan 15th, Tuesday. So, in the NASDAQ and the S&P and in the Russell, we are looking to sell the rallies due to the red omni. Traders, NASDAQ and the ES are poised to start off Tuesday as a sell of rallies, so that's what's on the board. There's a bond chart, the 30-year T-bond chart, that absolutely seems to be confirming a brief stock market pullback. A brief stock market pullback. We're not going to fall in love with the downside, but a brief stock market pullback is starting to be confirmed by the 30-year T-bond chart. That's in your ES, your NASDAQ, and your Russell. Then there's something else that we are going to talk about, traders. Very, very interesting market. Very, very interesting stock that has wreaked havoc on our markets recently. That stock is Apple. Traders, I am here to tell you this. Apple is not done yet with the downside. Apple has got further to go. And if I have OMNI fans that have been watching my videos, especially for the past few months, you will recognize this. Last year, September, the 21st of September, Apple puts in its all-time high of 705. So last September, a couple of months back, all-time high prints at 705. Not a few days later, the weekend of October 2nd, OMNI and me do some homework, and we put out a video, and in that video, we are calling for the top in Apple. I am talking right after it hits 705, comes off a little bit. OMNI makes me get out in front of this video in October 2nd and October 5th, it was that weekend, and it tells me to tell you that Apple looks like it's topping. Now, I had a fundamental and a technical reason. First thing I want you to do is watch this flashback of a video from October when I call the top at Apple. Here is the fundamental. Traders, how goes the Apple? How goes the Apple DAC? That's what we call NASDAQ. Why? Because if Apple's up 6 points, NASDAQ's up. I don't care what the other indices are doing. If Apple is down 10 points, NASDAQ's down. I don't care what the other indices are doing. You could have 5 out of 6 indices up, and if Apple is down, NASDAQ is down. That is Apple DAC. That's the name of the NASDAQ. It doesn't belong to itself anymore. It belongs to Apple. Traders, something about Apple. I wasn't really going to get into this. Let me say, I think Apple is a great company that produces great product, and they are king. They're the biggest company in the world. They're sitting on 117 trillion. Let me say it again. They're sitting on 117 billion, not trillion, sorry, $117 billion in cash. All right, they are king. So what does the king do to us little peons? They decide to change their adapters so that now you have to go out and buy new adapters. What worked doesn't work for the phones going forward. That, if you ask me, is Apple starting to nickel and dime us traders. Now listen, Apple's a wonderful darling of Wall Street, but I have a feeling Apple is, now that it's king, it's about to start getting Apple, arrows shot at it and bullets shot at it, and it is now going to be attacked. And what it is doing, if you ask me, is it's asking us to attack it. When you do something like, I have one of the first iPads that ever existed, that ever existed. My iPod's got a certain adapter that worked for every single iPod all the way up until now. With this new release and this new phone, you cannot use those same adapters with the new phones. That is them nickel and diming us traders. Now, what do we do when a company that's holding all the marbles starts crushing us and pushing down on us? They want to nickel and dime us. How fast would you turn from your Apple device to something other than it if you needed to, just to get away from these people? Now, I'm not telling you to do that, and I'm not saying Apple's a bad company. I see things suddenly changing. I see Apple now starting to get a little bit cheap with us, and I see people going, you know what, Apple, enough's enough. Because if you're Google or Facebook or almost any other internet company, you give your stuff out for free, or any of the bigger companies in this country, they're giving their stuff out for free. Now, we're not asking Apple to give things out for free, but do you need to nickel and dime us with $117 billion in the bank? Really? So I'd be very careful if I was the CEO or on the board of that company. I don't know if you see what we're seeing, but that was a little bit stingy and a little bit slighty on your part, Apple. And if you continue to do stuff like that, I assure you we will turn against you. So be careful out there. Okay, traders, so you've seen that, right? That is a true flashback from a real video that I shot for you, OMNI, right after the high was made at Apple. That was the fundamental. Indulge me. Please watch this flashback, because here is now the technical reason why I seen Apple topping. So I seen the technical reason on my chart, and I went and looked for the fundamental. I just showed you the silly fundamental, but here's the real McCoy. Here's the technical reason why I think Apple topped out, and I showed this to you top day when it was happening back in September, October. Indulge me and look at this flashback. Traders, looking at this parallel channel, this one in red, you broke through that parallel channel, but simple technical analysis 101. Take a trend line from the lows, go to the next set of lows, extend out. That is your support somewhere in the 630s. That's where it looks like you could get down to if they really want to start to hammer this thing a little bit. Of course, you'll probably find some support across this line here, so you'll find some support, somewhere on the way down. But this and this are almost in the same area. So you should end up coming down here a little bit according to the head and shoulders formation and this bear-looking flag right here in the right shoulder. That is your Apple. How goes Apple? How goes the NASDAQ, right? All right, traders. Now, Apple has dropped a lot of points since I showed that to you after it hit 705, 695, and I came out with this video. Since then, I've done a series of videos following Apple, and in that series of videos, I showed you some more charts. What I want you to recognize is this. Apple is in more trouble. Apple is going to decouple from the stock market soon. It's going to leave NASDAQ alone, or the NAPLDAQ as I call it. Once Apple breaks 480 on the downside, it's going to decouple from the NASDAQ and allow NASDAQ to free float once again. But I want you to watch one more flashback. This dates back to December 14th. It's a follow-up. So in October, the beginning of October, I come out and tell you Apple's going to top. Then I come out in December, although I did a video or two in between, in December, and I show you what has happened to Apple since the topping call. So I want you to see that. Do me a favor, indulge me, and just watch this flashback. We have charts on Apple computers, and Apple computers are in a repetitive pattern. Traders, you may or may not remember this. You may be a new fan of my videos, but the first day in October and the second day in October, the first and second day in October, this is December now, right? The Apple was running up. In October, it just started to turn slightly, and I got in front of this video, and I showed you some Apple charts, and I said, traders, I know Apple just put in its all-time high, but the Omni tells me to tell you that Apple has a problem, and I put up a chart in front of you, and the chart said, Houston, we've got us a big problem. I put that chart up on the board, and I said, I think Apple is topping. And I gave you this whole presentation. The fundamental news was that they came out with the new phone and the new adapters, and they're starting to nickel and dime people. And I thought people would start to finally turn against Apple. And we had a technical reason. There was a head and shoulders in Apple giving us a downward projection. So we had a fundamental, we had a technical. We brought you an Apple chart right after the highs were made and called top. Since then, we have dropped almost $200 in Apple. Now, Apple is in a repetitive pattern that tells me it's going to go even lower. Then there is Apple. How many of you remember this chart? I brought it to you the first, second, third, fourth, fifth day in September. I said, traders, take a look at this. In fact, it was October, not September. My apology. In October, I brought this to you and I said, traders, I think we have a big problem, because you see an inverted head and shoulders, which is bullish. It works so well. But now we have a big upright head and shoulders. I showed you this chart on this arrow day and said, I think the top is in. Do you know what has happened to Apple since then? Now remember, inverted head and shoulders gave us this parallel channel. Upright head and shoulders gives us what looks like a parallel channel. This is what happened to Apple since we made that call for you and told you it looked like the top was in. Could you imagine? It was around the 690 area. It went all the way down here, traders. It got to around the 500 area. Could you imagine that break? But what's important about this? You did a shoulder, head and shoulders, a bullish one because it's inverted, went into a parallel channel. Repetitive pattern, shoulder, head, shoulder, went into a parallel channel. Shoulder, head, shoulder. As of today, you should likely go into a parallel channel, traders. That's a repetitive pattern. Now, I'm going to make it a little darker for you. I want you to see this pattern. Very same chart. Shoulder, head, shoulder, parallel channel. Shoulder, head, shoulder, parallel channel. Shoulder, head, shoulder, parallel channel. And we are both below OTAPMA. And now we are below the 200 bar moving average. Traders, Apple looks like it is still in trouble, so I want you to keep an eye peeled on that. All right, traders, that is the real McCoy. This stuff really happened in October when it topped out. We called it. Then in December, when I wanted to show you what's happened since, we called it. Now, let's go to present time. Let's go to right now. Let's go to January 14th for trading, Jan 15th. Let's go look at present day Apple charts. Traders, let's go look at some charts. Traders, does this chart look familiar? Houston, we have a problem. Here is Apple Computers. This is the exact same chart that I presented to you back in the beginning when this happened. Right at this arrow, traders, I said, uh-oh, I think we have a top. Look at what happened. And then I showed you, right? Shoulder, head, shoulder, and then we ran into the parallel channel. Shoulder, head, shoulder, parallel channel. This is present day. This is today, Jan 15th, or Jan 14th, I should say. So here we go. Shoulder, head, shoulder. It developed into another one, traders. Shoulder, head, shoulder. Here's where we are now. This is the last thing that happened. Shoulder, head, shoulder. Here is Apple for trading on Monday, and here's the channel that Apple's about to fall into trading Tuesday and on forward. Because as you can see, it does shoulder, head, shoulder, and runs into a parallel channel. Shoulder, head, shoulder, parallel channel. Shoulder, head, shoulder. Doesn't get a chance to hit a parallel channel because it does another shoulder, head, shoulder. Now the parallel channel comes out. Traders, Apple has lower to go. OMNI told us when we were trading 695 that Apple was going to crack. We believe it goes below 480. Keep your eyes on Apple and watch it decouple from the NASDAQ. Let's continue moving forward for trading Jan 15, 2013. Traders, here's the NASDAQ. The brakes have been put on. This was a beautiful bull flag. As you can see, we did call it. We told you, don't worry about the gap. We're going to break out of the bull flag. We did break out of the bull flag. The last couple of videos were dead on accurate. Now, here we are. Monday, the market closed, and this is NASDAQ. This is considered an outside reversal down day. Why? It went higher than the day before's high. It went lower than the day before's low. And it settled lower than the outside, or lower than yesterday. This is deemed an outside reversal day down, telling us NASDAQ starts off on the downside. That is unequivocal. We use that when we see it. Then there is the Russell. Traders, Russell is in a bull flag clearly, but you can drop $10 to $15 and still be in that bull flag. We are day traders. What's wrong with the Russell coming off 10 to 12 bucks for a day trade and staying inside the confines of the bull flag? That's why we say we're starting off the day selling rallies. It may not end up that way. Then we have 30-year T-bonds. Traders, this chart is confirming my belief that we're going to get a brief pullback in the NASDAQ and the S&P. And look at this. You do have a gap right here. Here is your gap in the chart, the daily 30-year T-bond chart. There's a gap in the chart. Gaps almost always get filled. The bonds have gone up a couple of days now. I think they come up here. Bingo, hit that spot. That spot's interesting because A, it fills the gap requirement of filling the gap. And it hits our top trend line of the parallel channel. They both come in together right there. So I think if bonds run up to fill the gap, it pushes S&P down for a day or two while bonds go up for a day or two. Bonds fill their gap. Maybe S&P fills its gap. And back to happiness we should go. Now, this parallel trend line, you may want to know why it's going through these two little highs right here. Traders, this is all I did was take a pure parallel trend line. I took it off of this. This is one trend line. I simply snapped a parallel and put it where it fit. I put it at the high and let it go wherever it went. And this is exactly where it comes in. I didn't force fit this. It's just a parallel snapped at the high of the move. And that's what it gave me. And it comes in right at the top of the gap. Stuff like this does not happen by accident, traders. This is meant to be. That's where bonds are going. That should fill your gap. Then you have something like copper. Copper, another confirming indicator that we're probably going to go down for a few more days in S&P. Copper just broke out of this pennant and down from this major support line. Copper is here. We expect copper to come down a little bit more. And that is our technical reason why we think the S&P comes off on Tuesday. So, traders, you've seen the charts. There's our technical reason why we're starting off Jan 15th with a red arrow. We'll see where the day ends up. And how about a round of applause for Omni calling the top at Apple? Apple's the biggest stock in the world, basically. The most heavily traded. Everyone knows Apple. And Omni calls the top at the top. Go, Omni, go. If you would like to learn how to make market calls the same way I show you in these videos, I will teach you the Omni methods. You come on down to my livewithoscar.com site and fill out an application for OmniCamp. February 22nd through 25th, I am holding a 4-day training session live here in Las Vegas. I will teach you personally how to call these markets exactly the way you see me call them on this board. I will teach you how to make an Omni recommendation call exactly the same way I do. If you'd like to come on down to OmniCamp, come on down to Vegas. It's a great place to learn. Fill out an application for OmniCamp at livewithoscar.com, and I will call to qualify you. All right, traders, so that's it. Apple looks like it's going lower. Apple is going to decouple from our NAPLDAC and let NASDAQ go where it wants to go, and Apple will go where it wants to go. There is still fundamental trouble in Apple. There is still technical trouble in Apple, as I've shown you. Apple looks like it wants to go lower. The stock market looks like after a couple of days, it wants to go higher without Apple. That's what I think the forecast is going forward. But for trading Jan 15th, Tuesday, we're starting off by selling the rallies in the S&P and NASDAQ, and we'll see where it goes. Traders, always keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll, and watch out for Apple to decouple away from the S&P and NASDAQ. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.